Money never sleeps. And if you're looking for opportunities, I think like today's chart of the day will be that opportunity. I'm talking about Disney, the Walt Disney Company, ticker symbol DIS. Now, let's judge. And if you don't have those algorithms that MSA has, how do you find those opportunities? Therefore, I want to recommend to you quote media, because it will be a simple way when you go to the most active, just half an hour before the closing bell, you can find exactly, have an idea what will be the next resistance for the next week, the next expiration, or where do you have the vast majority of the accumulation of all the volume for the day. Now, of course, if you pay attention, let me bring my pencil. January 20, that's a monthly expiration for next month. You have the 86 call, you have 86 strike call. You have almost 6,367 contracts in volume. Now, if you match that against put, you will see that someone is telling you, because someone always knows, someone is telling you that there might be a chance that something might happen. Now, of course, we know that when it comes also to financial fake news, Jim Cramer loved December, so it's no surprise that these things are happening, but he hates January. He has little conviction into January. So right there, that's a little bit of your contrarian indicator, a little bit of the financial fake news narrative happening in the US and with media companies all over the world. Now, understanding this is what I will look into next month. Now, the beauty of this particular trade, look at this, it's 86 call, that's a strike. But if we pay attention right now, the Walt Disney Company is trading at 87. Now, someone, it's actually paying a little bit extra in that premium because they're not taking risk. If actually, for example, if it drops from 87 to 84, they will still have time to recover and probably just exit or break even. So you want to consider that. Now, when it comes to retail, $4.59, that's about $459, $460, $500 per contract might be a little bit expensive. So therefore, this is not where you want to look. Now, take a look at this one. It caught my eye as well. We have 2,262 contracts looking at next week expiration, because this is Friday 23. That will be the last Friday, the last expiration of the month. And if we apply the Newton's first law of movement, or pretty basic physics, if we're still doing this in a bad tape, it has been a very weak tape for stocks, little liquidity. So therefore, this might stick and continue. So 87, 84, this particular contract, 87, that's in the money. It's not deep in the money as Nancy Pelosi and her husband will do, but still you have a little bit of advantage. Now this one, 179, if I click on that particular trade, short term, less than 5 days to expiration, let's take a look at what's happening. Contract low, 69, open interest, 1,976 contracts, and the contract high was $10. Now, if I judge what's happening on the last month, take a look at what happened. So we're paying 183, probably $2 tops. Now, by mid-December, this contract was trading at $8. Now, this is what I call the range. The range basically tells you, okay, so today I paid this. Where it was about 8. So potentially, if I'm conservative and everything goes well, I can still think I can make 100%, because it was by mid-December was $8. Well, I actually have an opportunity to sell at 4. So that's 100%. Now remember, some of you that want to be aggressive, then you probably don't need 100%. You probably buy at 2. You want to sell at 3. That will be 50%. That's 50% probability. And that's what we call the range, the probability that this has an opportunity for you to make money. Okay, so that's where you want to look. And of course, is the chart of the day. So let's take a look what's happening there. And we're going to go directly to Trading View. And let's take a look with Hawkeye Traders. Not much happening on the bottom, still red, but see that impressive 1.32%. It is impressive because if you look at the left, we all go all the way to the pandemic levels, and that's very important right there because that's the rejection. Let's take a look. That's the rejection and massive liquidity. This area 83, we're at this level, so that gives you a sense that in the midterm, or so medium term aspect, take a look at that. You're at a key level right there, tons of liquidity. The whole thing, grab the liquidity here, grab it from the past, and now it's time to fly. To the upside, you're looking at a minor peak all the way back on August when it was trading at 125. But the reality is that you're looking for a double bottom right there. Let's take a look at the tools, and this is the liquidity, double bottom. So you shouldn't be surprised if we make an attempt in January with a little bit of good news and a few companies going into earnings season starting the second week of January 2023. It would be a couple good news, a lot of restrictions, a lot of not hiring, layoff. That's what the street wants to hear. That's what investors want to know. Cost cutting, a lot of that will help Disney. And although it's not a new name, the fact that Bob Iger is back on power, that absolutely is going to help. So this is the short of the day. A lot of happening right here. You have to take a look and think, okay, Disney has an opportunity. I will bet that with a little bit of a market shift in this market shift, the sentiment shifting, then absolutely you're looking for 97, potentially 99. The best way for you to play this short term, in the money, not too deep in the money, but absolutely in the money. The 87 call expiration next week, December 30. I wouldn't pay more than $2, and I wouldn't exaggerate, and probably just take 2 contracts and see how far that will take me. Hopefully, Mickey and Minnie into the new year will show us the path to green in our accounts. Thank you guys. Thank you for watching. And always remember, at the end of the day, someone always knows.